Recently, Warren Buffett has been buying ULTA Beauty stock. He bought around $266 million in the stock. This is very interesting, first of all, because he's Warren Buffett. He rarely makes mistakes. But it's even more interesting because recently he has been selling a lot. He sold half of his Apple position. So he seems to be a little bit bearish on the market. Also because he has a ton of cash. So, if he's making a buy, perhaps it could be interesting. And I'm gonna tell you already that ULTA Beauty is extremely interesting. It's in my watch list and I valued it before I heard about Warren Buffett buying it. Therefore, we have a nice video ready, because I already analyzed the stock and I can tell you my opinion on it. Recently the stock has been plunging and is down 40% since its highs. Before we go into the financials and the valuation, let's take a while to talk about the business, which is incredibly interesting. The business is fairly simple. ULTA Beauty is the largest beauty retailer in the United States and the premier beauty destination for cosmetics, fragrance, skincare products, haircare products and salon services. ULTA is basically the biggest store where you can get beauty products and get your hair and whatever done. The company has 1,350 stores, predominantly located in convenient, high-traffic locations. And they also have a partnership with Target, and they have more than 500 ULTA Beauty at Target shop-in-shops, which provide guests with a highly curated prestige beauty assortment in a unique and elevated presentation in 1,000 square feet of dedicated space within certain Target locations. And now the most interesting part about ULTA Beauty, in my opinion. More than 95% of total sales come from members. This is an unique achievement. It's unbelievable, and it means that clients will tend to be fairly loyal to ULTA. So they are going to keep going to ULTA even if a recession hits. Very likely. Revenue growth in the next few years is going to come from the opening of new shops and the addition of new products which could improve sales per square meter. So of course growth is going to slow down during the years because the company has already reached a good level of maturity and the possible location they can open are going to reduce with time. But they still can open many more locations for sure. Here you can see the approximate percentage of net sales attributed to each category for the periods presented. So, the biggest category for ULTA Beauty is cosmetics, then we got skincare and hair care. So now you got an idea of the business of the company, so let's get into the financials. As you can see, in the past few years, revenue growth has been really good, but in the next years, it's going to slow down. The company has reached a good level of maturity, therefore growth is going to be slower in the next 5 to 10 years, but it's not going to be non-existent. The company is still going to grow. Also, EBIT margin growth has been really good. This huge fall is because of COVID, but EBIT margin has gotten much better past the pandemics. And finally, the EPS has been growing even more thanks to buybacks. The company generates a good amount of operating cash flow, but they also have to spend a decent amount in capital expenditures to grow and to maintain their shops. This is a fairly capital-intensive kind of business, but not too much. So free cash flow has been pretty good with a margin around 10% or something like that. Now let's take a look at the balance sheet. The company has total cash and short-term investments for $524 million. They have no short-term debt, but they have a current portion of capital lease obligation for $294 million. They have no long-term debt, but they have capital leases for 1.6 billion. And finally, the valuation looks extremely interesting. As you can see, the forward price earnings ratio is almost at an all-time low. The all-time low was 10, reached during the pandemics. And right now it's at 12.5, so we are very, very near. And finally, the company's return on capital and return on equity are extremely high. They are really, really good. So the financial statements are really, really good. The company has no debt, they have some capital leases, but the balance sheet is basically perfect. There is still decent growth coming. Now I'm gonna show you the analyst projections, and in the past growth has been really good, margins are very high, and the returns on capital are so good. These are the analyst estimates, and for the next 5 years they expect a revenue CAGR of 6%, while they expect an EPS CAGR of 12%. And now I'm finally gonna show you my valuation. For 2029 I projected revenues of $14.7 billion with an EBIT margin of 14.5%. Then subtracting taxes, we reach a net income of $1.6 billion. And I projected that the company is going to buy back $6 billion of shares while paying stock-based compensation for $295 million. And in my opinion, the company could reach an EPS of almost $43. Probably a fair price earnings ratio for this company could be between 15 and 20. 20 could be in a very good situation, perhaps with a strong market and good results from the company, while 15 could be in a bad market with kind of weak results. So the price per share could reach between 644 and 859. But I also want to show you the discounted cash flow, which changes the valuation in a considerable way. To calculate the discounted cash flow, I use owner earnings, which in 2029 could be around $1.4 billion. I used a 10% discount rate and a perpetual growth rate of 3%. And this would take the value of the stock to $566. So much lower than using multiples. That's the reason why I did not buy the stock yet. Warren bought it, in my opinion, because this is an obvious situation where a stock is undervalued. The stock is clearly undervalued with a forward price earnings ratio of 12, but in my opinion you can't get an extremely good performance. Warren doesn't care about making like 20% per year on his investments. So he bought the stock, and this is a perfect Warren Buffett stock. And probably this stock is going to perform very well in the next few years, but I don't think you can make 20% per year, which is my goal, investing in this stock. That's the reason why I didn't buy it. But if you want a safe, stable, and liked by Warren Buffett stock, ULTA Beauty is absolutely perfect. And it's very likely, it's highly likely that the stock is going to be higher than today in 5 years. Probably even less, probably it's going to take much less for the stock to be higher. Even more so now that Warren Buffett bought it. So this is a very interesting stock in my opinion, and you should absolutely keep it in your watch list. Let me know what you think about ULTA, type a comment, and please remember to leave a like and subscribe to my YouTube channel if you're new. See you next time. Bye!